Hello. This is Tamika Peters, President and CEO of Grow Your Nonprofit, where we help small, startup, and stagnant nonprofits grow through fundraising strategies, strategic planning, and so much more. Guys, today you're in for a treat. I have my special guests here, Tariq and Kenyatta. They are insurance experts. We'll talk about charity-owned life insurance for your nonprofit to help you create sustainable fundraising sources. But before we get started, I'd like to thank the sponsors of my podcast. Trinity Life Foundation Naples, helping at-risk youth through their enrichment programs. AHVED, that stands for the Associations of Haitians Living Abroad. They just opened an amazing support center right here in the beautiful Fort Myers, where they help with immigration support, utility billing, and English as a second language. Best Insurance USA, a Florida Blue provider. Last but not least, Premier Mobile Health Services, your route to better health. So, guys, like I said, my special guests here, Tariq and Kenyatta. How are you guys doing today?
Awesome. Happy Tuesday.
Yes, doing great. Thank you for having me.
Yeah, thank you for being here. Just can't wait to learn more about this charity-owned life insurance, Tariq. So before we dive into the conversation, share with our audience a little bit about yourself and how you came into this field.
Yes, thank you again, Tamika, for having me. Really excited to be here and to share my knowledge with your entire network. Because, when it comes to insurance strategies, most people just don't know what is available to them. Similar to your business model where you help nonprofits grow, you're sharing knowledge that others just don't have access to. Insurance is the same way. There's so many types of life insurance, health insurance, other types of benefits. It gets very confusing. So I'm definitely happy to share what I know that can help nonprofits build their donor base.
All righty, thank you.
Would you like me to give a little info on myself and how I got into the business?
Yes, please.
So I'm actually somewhat new to the business. I really got into the industry in 2023. I've been in financing for over 10 years. In 2014, I got into business finance. 2016, I earned an MBA with a major in finance at Nova Southeastern University in Fort Lauderdale. I had worked with many different direct lenders. I've been in the business debt advisory space for the last 8 years now. But insurance was something that I got into because of life situations. 2023 was a tough year for me and my family. I had watched my grandfather in February of last year, 2023, pass away. He at the time had 2 caregivers with him on a daily basis. One would come every day, actually, most of the entire day, just to take care of him. Another would come, at least 3 or 4 times a week, plus my mother, plus all the neighbors that would, help him out. And if he didn't have certain types of insurance, he wouldn't be able to have afforded that and live as long as he actually did. He passed away one day after his birthday at 86 years old in February of last year. And then that's really where it started for me, because a few months later, my grandmother on my father's side passed away. That was my last grandparent. A few months later, a coworker who had sat next to me for the last 4 years died of pancreatic cancer. Wow. She actually was an insurance agent as well, which I didn't know until after she passed away. My wife had some other deaths in the family. And, when things like this happen and there's such traumatic events for you, it distracts you from what you normally do in your daily life. And I was seeking other opportunities, but I was seeking to help people with solutions when these traumatic events happen. And by a chain of events, it ended up turning out that life insurance, which has living benefits in some cases, which I can go over in a little bit, was a solution to that. So I naturally have a financial background. And when I started studying insurance, I have life insurance myself. But even though I have a financial background, I didn't actually know what I was really signing up for. My wife really pushed me to get life insurance. We had just bought a house. We have 2 kids. By the way, we have 1 on the way. So,
Ooh, congratulations.
and any day now, by the way. And
Wow.
so I didn't know what I actually was signing up for. I knew I needed a life insurance, but after studying, what it all is about, I realized that the agent that we were working with set me up in the right way. But it made me realize, that others, unless you go through this type of training, getting this specific education, you would never know what types of insurance policies are out there, but what they can do for you. And especially as it relates to nonprofits, building a stronger relationship with your donors, there is some very powerful strategies. So that's a little bit about how I got into the industry and where I am today.
Kenyatta, would you please tell us a little bit about yourself and how you got into the life insurance business?
Yes, I'm based here in South Florida, the Fort Lauderdale, Miami area, Broward. And I got into the business in 2010. And the company that I worked for at the time focused merely on Medicare. So anybody 65 and above, it was great. And just like Tariq, we all have these personal stories and we have these concepts of what do you think about when you think about life insurance? Most people don't think they need it because especially if they don't have any kids or if they have a business or whatever the scenario is. But there's so many different opportunities, and those opportunities lie in learning exactly what happens to people when they don't have it. My personal story, my dad had his own business, and in Virginia, construction company, he didn't have anything structurally in place. He had a business partner, handshake, nothing in place. And when he got really sick, the business fell apart. He had to go into a long-term care facility. And because he didn't have anything set up properly is where my need to really learn about how can we integrate life insurance into the business segment. Now, today, obviously, we're going to talk about something completely different. But when you think about what can life insurance do for a business owner, when you have an employee that you want to recruit, there are opportunities to use life insurance to do that. If you have a business partner, do you have a plan in place that if that person dies, to buy that person out? And what I specialize, Tariq can attest to this, we specialize in helping businesses across the United States learn about those particular options and more or less create specific solutions for those businesses once we figure out what their specific needs are. I have 3 children. My passion for insurance is to talk to as many people as possible and just educate them on what their options are. And it's so much more than just, I have to, the only person that benefits from life insurance is the person that dies, the person that receives a benefit when someone dies, and that's not the case. There are additional benefits that you can take advantage of while you're living, and there's so much more to it. But I know today's focus is on something different, and we could talk about that on another call. But that's I am.
Oh, thank you. I know culturally, life insurance has always been looked upon. Oh, if I get life insurance, someone's going to try to take me out to get my policy. But it's for me, it's like, what is your legacy? And now we're talking about living benefits. Well, what is your legacy while you're living, and what is your legacy when you're away? Because let's face it, we're not all going to be here. So Tariq, can you please kind of dive into what is charity-owned life insurance anyway?
Yeah, so let me can give you a few of the examples of of what really charity-owned life insurance is all about. So, it really starts with the donors. Okay, so the charity itself doesn't really buy a life insurance per se. It's the donors. Okay, so there's a few examples that I'll start with that are just the real basic ones that have just to do with life insurance. And then I'll go over one that really helps donors the most common, but I figured that it's probably best to give a good overview without going in too far into depth. And by the way, just before I get into that, when it comes to these types of life insurance strategies, especially when it's business-owned life insurance, there's charity-owned life insurance, any of these more somewhat complex strategies, they're really, it doesn't just come from the life insurance agent themselves. We partner with attorneys, especially estate planning attorneys, to give the legal advice. That is the key component to this. On the other hand, there's the tax advice, and that comes from an accountant, primarily a CPA, but an accountant, right, to give tax strategy and advice. So it's a 3-person process, or 3 entities, depending on how you look at it. So again, it's the legal advice with an attorney, especially a estate planning attorney, CPA or tax advisor, and the life insurance. The life insurance funds everything. So we're the financing aspect, again with the life insurance, tax, and legal. So some of these concepts I won't go into extreme depths because they are legal strategies. And then there are some strategies that I won't give advice on, which are the tax strategies. So especially when it comes to donors who sometimes have reasonably high net worths, sometimes ultra high net worths, we're not giving them legal or tax advice. We are just speaking about insurance, and that's what we'll talk about today as well. So one concept is when there's a donor who already has a life insurance. Okay, so let's say they, took out life insurance, decades ago when they first bought a home. Now they have investment properties, they have different assets, and the life insurance that is remaining, they don't necessarily need, but they're building a strong relationship with the nonprofit. They want to then give that charity or nonprofit the life insurance. They want to sign that over so when they pass away, the benefit goes to the nonprofit. This is not very common out there, but it is a strategy. One reason why a donor would even do this, it's not because they're just so generous. Yes, they are generous, but they're not doing this specific strategy just to be generous. Nobody does anything like that. But when you look at, again, high revenue, income earners, reasonably high net worth individuals, they are hit with taxes very heavily in most cases. So what this may allow them to do, if you transfer their life insurance to a nonprofit, they could receive a tax deduction. Now that's where the tax strategist, the accountant, would come in, but it is possible. So again, that's when they already have a life insurance. The charity, if the life insurance has a cash value, and again, we can go into different specific types of insurance. Some insurance just covers X amount of years, 10, 20 years, and then it ends. Other life insurance, when you pay into it, it builds cash value. So some of that premium goes into an account. If that life insurance, if that type of life insurance is transferred to the nonprofit, the charity could cash out on that. And that again is a benefit to the charity, besides just waiting for the death, of the donor. But the donor themselves could get a tax benefit, a tax deduction, because they're transferring life insurance with a value, and they could receive a tax deduction in that year. So again, not very common to do that, but it is one strategy. The other is then a new life insurance is purchased. So a donor building a relationship, and they again want to pass on a legacy, they want to support this nonprofit. They could purchase a life insurance very similar to the first example. Again, not very common. And the one drawback of this is that for the nonprofit, there's a chance of a lapse in payments. Maybe there's a disinterest in the future, they don't pay. So a lot of times, if this strategy is applied, the donor will do what they call a paid up insurance, right? They will pay 10 years all in one shot or something like this, so that there's no lapse in premiums. There may or may not be a cash value. The advantage in this one, just going back to the first example, is that the value of the policy could be a tax deduction. In the second example, there's not really this cash value, but there's payments that could be made. There are tax deductions that could be made on the premium that is paid. So if it's paid to the nonprofit and the nonprofit pays the premium, they can get typically more tax deduction on their premium. So again, this is a way to pass on, at the donor's death, typically, a large amount of funds. But to the nonprofit, it's uncertain. You don't want your donors to pass away. It could be, 5 years, 10 years, 20 years. You don't know, like, when someone's going to pass away. And you don't want that to really happen. But it is a way that life insurance could be transferred to a nonprofit, and the donor receives tax deductions. Okay, so again, not very common, but it is possible. The most common one, and even though I've been somewhat newer to the industry, I've partnered with a firm in Palm Beach Gardens that kind of is a common denominator with Kenny and I, and they have over 150 years of collective experience in designing life insurance strategies, working with CPAs and attorneys, design life insurance strategies for their clients and our clients. And there is one strategy for especially the higher net worth individuals, especially when there is assets, tangible assets such as real estate that the donor has in their possession. Okay, so at this point, I'm going to switch to a strategy that we would definitely work with an estate planning attorney and a tax strategist on. And the way it works is it's called the Charitable Remainder Trust, a CRT, Charitable Remainder Trust. An attorney can speak in depth on what these things are, okay? But I will provide the general overview of what this is and how the life insurance fits in. So just for example, if there is a donor that owns a property, just to give you an example, let's say the property is worth $1 million, okay? And they want to sell this property and put it into an account that grows interest, let's say 5% interest a year, okay? So the property being worth, and that'll be their income, that 5%. When they sell a property for $1 million, just in this example, there's typically a capital gains tax. Could be around 20 to 40%, depending on where you live and the time that you're watching this video. Assuming that there's about 24% interest, after selling $1 million property, they end up with about $760,000, not $1 million, $760,000 cash, okay? Because there's a capital gains tax. They put that into an account. It grows at 5% per year. They get $38,000 a year in income just off the interest, okay? Now that same amount, what they want to do at their death is pass that money on to their heirs, their son, daughter, grandkids, whatever it is. Now that amount for $760,000 that's been sitting in that bank account, growing, the interest is being used for their retirement, lifestyle, whatever it is. When that money gets transferred to their heirs, guess what happens to that heir? They get hit with tax, income tax. And at $760,000, they now will have a very steep tax bill. If you live in a state that has state taxes, you have even more taxes. But long story short, if there is a rate of tax of about 30%, and you're transferring $760,000 to your son or daughter at your death, that son or daughter is going to have to pay about $300,000 or so in taxes. So that $1 million asset that your donor sold, they're earning about $38,000 a year in income. They pass it on to their son or daughter. The son or daughter only gets about $450,000 at the end of the day. And you started with $1 million property. And again, your son or daughter or grandkids or whoever it is gets about $450,000. So now here's where it gets interesting for a donor and the nonprofit. They use a charitable remainder trust. There's a few variations to this. I'm not going to go into depth. If you take the $1 million property and you then transfer it to a nonprofit organization, there is no capital gains tax. They transfer it through a charitable remainder trust, okay, and make the charity, the nonprofit, the beneficiary of this, okay? So again, the charity at the end of the day really receives $1 million property. The trust itself owns the property at this point. Again, I won't get into too much depth on what this is and the mechanics of it, but long story short, there's $1 million asset, okay? At that point, it's still being put into an account that the donor is going to collect interest on. Let's say it's 5%, like in our previous example. In the previous example, they had to pay capital gains tax first. So they ended up with $760,000. At 5% a year, they got 38 grand. With the CRT, the $1 million grows at 5%. That's $50,000 per year that they get in income. So already the donor is getting more money in income because they transferred the policy they transferred the asset without capital gains tax. So they're getting 5% on the full amount. So they get 50 grand every year right off the bat. Okay. Now, at their passing, they're transferring that asset to the nonprofit. Nonprofit can sell the property and get $1 million. So that's great to the nonprofit. Okay. Now, what about the heir? The son, daughter, grandkids. You're saying, well, the property got transferred to a trust. What happens to the heir? The heir is saying, hey, I thought you were passing this property on to me. Well, here's where life insurance solves that problem. So not only did the donor get 5% a year in interest that they're living off of, so they got, again, about, let's call it 12,000 more per year in income. But when they transfer that asset to the charitable remainder trust, there's another bonus. It's a tax deduction. So the tax deduction, depending on where you live and the time frame and the changes in taxes, again, I won't speak specifically on tax strategies, but there could be anywhere from 100,000, 200,000, depending on where you live and the time and your income bracket. But let's just say it's at least $100,000 of a tax deduction right at the time that they transferred the asset. Again, these are reasonably high net worth individuals. That tax deduction is very powerful to them. So what they do is they use the tax deduction and potentially some of the additional funds from the interest, and they buy a life insurance policy. So the heir, again, was going to receive about 450,000 or so from the asset being transferred to them at some point. Well, now their loved one is going to write a life insurance on themselves and make their loved one, their heir, the beneficiary. So if you make it at least the 450,000, the heir gets their money that they were going to get anyways. Maybe you make a larger amount. It's up to the donor to decide the amount of life insurance. But now their heir is not dissatisfied with them for the remainder of their life. Okay, so they know they're getting paid, and the life insurance pays out tax-free. So the heir does not have to pay any taxes on that amount that they're going to receive from that life insurance benefit. So again, just to summarize, the donor gets a large tax deduction at the time of transferring the asset to the charitable remainder trust. They get a larger amount of income from the interest that's earned every single year. And their heir gets a large tax deduction, and finally the heir gets a large sum of life insurance, but the nonprofit gets an asset that they could do whatever they please with it afterwards. One of the ways to do that is they set up an irrevocable life insurance trust to put the insurance policy into, which then goes to the heir. So charitable trust, insurance, irrevocable life insurance trust. These are all legal concepts that we would work with an attorney, usually on behalf of the donor, to set up. These are, specific legal strategies, and then work with the CPA or accountant to advise on the tax strategies.
Yeah.
But if you're, for a lot of donors out there, you would have to have gone through this type of life insurance training to even know that it exists.
Absolutely.
And many insurance agents out there, have been in the industry for many years, and these are still new concepts. It's just so many layers to what these insurance policies can do. So that's what it can do. But then what does it do for the nonprofit, and why would they want to do this? And it all comes down to the relationships with the donors, which will be the next part we'll talk about. So I'll just pause there for a minute, just to contemplate, what I just said.
Okay. And we're actually past our time. So we'll end with Kenyatta. We talked about relationships, because oftentimes life insurance is one component, but most nonprofits don't have endowments. And endowments, I look at it as your 401k of your nonprofit, or your retirement plan, or your sustainability plan, because at least 30% of your annual budget should be coming from the interest of your endowment. So whether that's, if your budget is $1 million, maybe you need 3 million in your endowment, and maybe you get a 5 to 9% return on the annual basis. But it all boils down to relationships, because you have to know about it, but not necessarily be knowledgeable. That's where your CPA and your estate planning attorney comes in. So Kenyatta, real quickly, can you expound upon how does that nonprofit start to build a relationship with their donor to be comfortable enough to even have this conversation about life insurance?
A lot of it is learning their personal story. So when we think of businesses, we often think of a business and we think of a service or a product. But we have to think that person will go home to a family. That's their purpose for having a business. When you learn to dig in beyond what your purpose is in terms of what you're trying to sell, and get on the other side of, you're dealing with real people that have families, they have grandparents, they have vacations, they have things they want to do. And when you understand their family aspect from whatever service or product that you're trying to promote, that allows you to know why they are in that particular business, and allows you to be able to have that conversation first. And then you can talk about, what is it that your particular nonprofit does? And then they're more, in my opinion, they're more invested in learning about you, because you've taken the time to learn about them. A lot of the clients that we work with Sonny and I, a lot of it is more or less like really learning about their specific scenario. So when you're out here as a nonprofit and you're in your community, whether it's a Starbucks or if you're on the golf course or at the gym, have an open, genuine conversation, learn about people. A lot of times, a lot of relationships that we form, that particular relationship may not be the client for us, but they know someone. So when you're out here, we spoke about it earlier. I learned this concept earlier in sales. It's a 3-foot rule. Wherever you are within a 3-foot radius, tell people what you do. There's a reason you started your nonprofit, and the more people that know about it, the more you're going to grow, the more people you're going to help, and it's going to enhance your purpose. But a lot of it, you have to start with generally learning and being, my wife had this coined phrase. I'm not going to give credit to her because this is between us. You have to be, you have to be like really in tune to being curious about what it is that person is there for, like what's their why. And once you understand that, it'll allow you to be able to really, promote your service or business to them, because you'll have a vested interest because you know who they are. And I think that'll help, build a relationship. And from there, you can talk about your business. But I think that's the most important thing, is building that foundation first, learn who they are, and then you can talk about your business. If you lead with your business, you're like every other salesperson and not going to hear it. And be genuine in your approach, and I guarantee you'll get more opportunities to grow your business that way.
Right. And we talk about that in nonprofits, especially when it comes to leaving an estate plan, the donors leaving an estate plan for the nonprofit, basically asking the right questions. Whether you're asking your donor out to lunch or coffee, you learn a lot, whether someone's a widow or someone doesn't have any family, or someone just had an anniversary. You go back to your nonprofit, you put that in your donor management database. And when they have that birthday, you put that in your moves management, and it comes up and, hey, John, today I know it's your 80th birthday. Oh my God, you remembered my birthday. Mm-hmm. And, just the small things, like you said, building those relationships and it all adds up. And you start learning how to ask the right questions and then presenting that information. And sometimes they haven't even thought about it. So that's very important. So guys, thank you so much for your time and your knowledge and being willing to share this with our audience. Not a lot of people, even though we're in 2024, not a lot of people talk about life insurance. It's kind of that like dirty little word that we don't know about, but sometimes we just need to get out of our own way and think about the legacy you want to create, especially if you have kids, you have a family. What are you leaving them? We don't want to leave them bills. We don't want to go fund me for a funeral. So this is Tamika. I'm signing off. Don't forget to like and subscribe to my YouTube channel. And don't forget to check out my DEI, that's Diversity, Equity, Inclusion Passport Workbook, now available on Amazon, where it takes you on a journey for self-discovery, where you learn about yourself and go out and learn about others. And guess what, guys? It'll make you a better person. And don't forget to check out our Etsy store, where we have nonprofit merch. So stay tuned for more empowering content on Grow Your Nonprofit. Bye-bye.
Introducing the Grow Your Nonprofit merch in our Etsy store. So go on over to our Etsy store today and explore our collection. Pick your favorites. By doing so, you're not only elevating your style, but also contributing to the Grow Your Nonprofit mission. Thank you for being part of our community, and thank you for your dedication to making a difference. We appreciate your support, and we can't wait to see you rocking our Grow Your Nonprofit merch. Now stay tuned for more empowering content on Grow Your Nonprofit podcast. And until our next time, keep growing and keep giving.